Hey, everyone, and welcome back to the channel. Have you looked at the price of gold lately? It's 2026, and if you've been paying attention, you'll know that gold has been on an absolute tear. It's not just a small bump. We're talking about a historic surge that has left many investors and everyday people wondering, what on earth is going on? Today, we're going to break down exactly why gold is skyrocketing. This isn't just one single factor. It's a perfect storm of economic, political, and technological forces all converging at once. So, grab a coffee, get comfortable, and let's dive deep into the real reasons behind the 2026 gold rush. First up, let's talk about the big one: inflation. For the past couple of years, we've all felt the pinch. The cost of everything, from groceries to gas, has been climbing steadily. This isn't just a feeling. The official inflation figures have been persistently high. When the value of our money, the US dollar, is being eroded by inflation, people naturally look for a safe place to store their wealth. Gold has been that safe haven for thousands of years. It's a physical asset with intrinsic value. Unlike paper money, which a government can print more of, the supply of gold is finite. So, as the purchasing power of the dollar goes down, the price of gold, measured in those weaker dollars, naturally goes up. People aren't just buying gold. They're trading their depreciating cash for a tangible asset that holds its value over the long term. It's a classic defensive move, and right now, that defense is in full swing. Closely related to inflation are interest rates. Now, this can get a little tricky, but stick with me. For a while, the Federal Reserve kept interest rates relatively low to try and stimulate the economy. When interest rates are low, the return you get from savings accounts or government bonds is pretty pathetic. Why would you keep your money in a bank earning next to nothing, especially when inflation is eating away at it? This is where gold shines. Gold doesn't pay you interest, which is usually seen as a downside. But when interest rates are low, that downside becomes much less of a big deal. The opportunity cost of holding gold instead of an interest-bearing asset is almost zero. So, investors look at their options and think, I can earn a tiny amount of interest and watch my money lose value to inflation. Or, I can hold gold, which has the potential to increase in price significantly. It becomes a pretty easy choice for many. This low-rate environment has pushed a flood of money out of traditional savings and into the gold market, driving up demand and, you guessed it, the price. Now, let's zoom out and look at the global picture. The world in 2026 is, to put it mildly, a very uncertain place. We've seen a rise in geopolitical tensions in several key regions. Trade disputes that we thought were resolved have flared up again, and new political instabilities are making headlines every week. When there's this much uncertainty on the world stage, investors get nervous. They start to pull their money out of what they see as riskier assets, like stocks in volatile markets, and look for safety. Gold is the ultimate global safe haven asset. It's recognized and valued everywhere, and it isn't tied to the political or economic fortunes of any single country. During times of global stress, there's a flight to safety, and gold is the #1 destination. It's like an insurance policy against global chaos, and right now, a lot of people feel they need that insurance. This global fear is a powerful fuel for the gold price rally. But it's not all about fear and economic doom and gloom. There's a fascinating and positive story happening on the demand side, and it comes from technology. Gold isn't just for jewelry and coins. It's an incredible conductor of electricity. It doesn't corrode, and it's highly malleable. This makes it an essential component in a huge range of high-tech devices. Think about the smartphone in your pocket, the advanced medical devices saving lives in hospitals, and the complex circuitry in electric vehicles and AI data centers. The technological revolution we're living through is incredibly gold. We push for more green energy solutions, like advanced solar panels. And as the Internet of Things connects everything from our toasters to our cars, the industrial demand for gold has been quietly but steadily growing. This isn't speculative demand. It's real, physical demand from manufacturers who need gold to build the products of the future. This growing industrial consumption puts a constant upward pressure on the price. Let's bring it back to currencies. The value of gold is often measured in US dollars, so the strength or weakness of the dollar has a direct impact on its price. Over the past year or so, the US dollar has been weakening against other major world currencies. There are a few reasons for this, including our national debt levels and the interest rate policies we talked about earlier. When the dollar weakens, it takes more dollars to buy the same amount of gold. This automatically pushes the dollar-denominated price of gold higher, too, for investors holding other currencies, like the euro or the yen. A weaker dollar makes gold cheaper for them to buy, which boosts their demand. So, you have this dual effect. A weaker dollar directly increases the price for US buyers and also makes it more attractive for foreign buyers, further increasing overall demand. This inverse relationship between the dollar and gold is a classic market dynamic, and it's playing out perfectly right now. Now, let's talk about market sentiment and psychology. Markets aren't just driven by numbers and data. They're driven by people, and people are driven by emotions, primarily fear and greed. Right now, we're in a very strong fear of missing out, or FOMO, cycle for gold. As the price started to climb, it got more and more media attention. Financial news channels started talking about it. Online influencers made videos about it, and you've probably heard about it from a friend or colleague. When people see a price going up and up, they start to worry they'll miss the boat. They see others making profits and want in on the action. This creates a powerful feedback loop. Rising prices attract more buyers, which creates more demand, which pushes prices even higher. This speculative frenzy can take on a life of its own, sometimes detaching from the underlying fundamentals. It's the psychology of momentum, and it's adding a significant amount of fuel to this fire. Finally, and this is a huge one that often goes on behind the scenes, we need to look at what central banks are doing. Central banks around the world, especially in emerging economies, have been on a massive gold buying spree. For years, the world's financial system has been dominated by the US dollar. But many countries are now actively trying to diversify their foreign exchange reserves away from the dollar to reduce their dependence on the US and protect themselves from potential sanctions or dollar volatility. What are they buying instead? Gold. Gold is a neutral reserve asset that isn't controlled by any single country. Countries like China, Russia, India, and Turkey have been adding tons and tons of gold to their vaults. When these massive institutions, which buy in enormous quantities, are consistently on the bid side of the market, it creates a huge and steady source of demand that acts as a strong floor for the price. This isn't speculative buying. It's a long-term strategic shift in the global financial order, and it's incredibly bullish for gold. So, to wrap it all up, the skyrocketing price of gold in 2026 isn't a mystery. It's the logical outcome of a perfect storm. You have high inflation eroding the value of our money. You have low interest rates making traditional savings unattractive. You have global uncertainty pushing investors towards safety. You have rising technological demand from our most innovative industries. You have a weakening US dollar making gold cheaper for foreign buyers. You have powerful market sentiment and a FOMO-driven buying frenzy. And underneath it all, you have the world's central banks systematically buying up gold as they diversify away from the dollar. When you put all of these factors together, it's no wonder that gold has become one of the best performing assets on the planet. What do you think? Are you surprised by any of these reasons, or did you see this coming? Let me know your thoughts down in the comments below. I'd love to hear your perspective on this historic gold rally. And if you found this breakdown helpful and want to stay ahead of the curve on the biggest economic trends, make sure to hit that like button and subscribe to the channel. Thanks so much for watching, and I'll see you in the next video.